is the GBPUSD, and last week was quite an interesting session for us. During the first half of last week, it was more of a choppy market conditions where we were doing more of buying until on Thursday we had of the PPI data following the CPI, which all came in beyond expectation, giving some further traction in favor of the US dollar. And of course, the hawkish remarks by the Bank of England's policymakers did not have anything to do to push the pound sterling to the upside. So things are looking bearish, and the path of least resistance for the pound sterling is looking further to the south. Now, since the week began, the new trading week unfolds. The GBPUSD pair finds itself trapped in a consolidation phase, mirroring recent losses. And despite a favorable market sentiment, the US dollar's persistent strength keeps the pair subdued at this point. And all attentions remain fixated on the upcoming Federal Reserve decision, poised to shape the current market dynamics. However, I think that the pair may encounter obstacles amidst cautious market sentiment leading up to this event, and as a result, we do want to be looking for significant confirmations before jumping into any positions. And also remember that the consumer inflation expectations, as reported by the Bank of England last week Friday, recorded a modest decline to 3.0% from the previous uptick of 3.3%. Now, this prompted the market speculations of a potential rate cut by the Bank of England in June, whereby exerting some downward pressure on the pound sterling. And this may be a limiting factor, and this is one of the reasons why I said that this week is looking more of going to the downside. Now, in preparation for today's trading session, I have a simple trading setup which I was able to identify on the 4 hours time frame. And what I did on the 4 hours time frame was to take into consideration the character of price action since the beginning of the month of February. And if you look at the character of market participants since February began, you will see that price had consistently found higher highs and higher lows. And if you correctly connect the pivot lows together, you will see we have a couple of ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we obviously want to be looking out for patterns and structures that supports the idea of buying the assets. Now, we will be using this major trend line here as our yardstick today. Now, if we zoom right into the current structure, as you will see here, you can see how the last 36 hours in this market have witnessed price action trading around that ascending trend line. So in the last 6 weeks, this trend line is yet to be broken. Every time price comes into the trend line, we see bullish traction pushing price to the upside. Now, as we go into the new week, are we going to see the same situation happen today, or is there a chance that price action will break down the ascending trend line and the 1.27250 level to incite a downtrend move? Now, look at the structure here. Besides the trend line, we have a key level for this week, which is around the 1.276. And look at how beautifully this level had played a major role in guiding price movements. It was initially a selling niche at the beginning of this month. And during the second week of this month, we saw price break out of the structure. And for about a week, price action maintained above this area. And yet last week, after the inflationary data, which came in stickier than expected, we saw this area broken to the downside. Now, we have a range bound structure where price action has been trading between the 1.276 and the 1.27250 area to emphasize the prevailing uncertainty in the market at this point. Now, if I am going to be buying or selling this asset, I would like to see the market give me a signal in the form of either a breakout of the resistance line, that is the key level, breaking out of that descending trend line too. Look at this descending trend line here. If it breaks out both of them, which beautifully shares a confluence with our key level at the 1.276, I want to be in for buying opportunities. However, if that structure cannot be broken to the upside and instead we see price break down this ascending trend line and the 1.2725, then we are in for selling opportunities. So you can see how crucial this current juncture is in this market. So I encourage us all to mark out this confluence on our chart, as we will be needing them as a reference point to guide our trading decisions for today. So with this information we have gathered right here on the 1 hour time, on the 4 hours time frame, let's scale down into the 1 hour time frame, where we do want to see how market participant has been reacting to this current structure, especially around this ascending trend line. Now, scaling back down into the 1 hour time frame and looking at how the market has been reacting to this current structure since the new week began, you will see that price action was initially confined within the range of the 1.27390 level and the 1.2726 area to emphasize the prevailing uncertainty in this market. And one interesting thing about this structure is how that ascending trend line we identified on the higher time frame slices through that range bound structure. Now we have something to guide our ascent for this week, so we want to be seeing price action break out of the resistance line at the 1.239 to join an uptrend move. Now, if price continues to climb new highs, then the breakout of the key level at the 1.276 will further confirm the strength of the buyers in this market. Well, if you would ask me personally, instinct tells me that price will go south. That is, price will go to the downside due to the fundamental factors. And one of the fundamental factors is the CPI data, which is higher than expected. The inflation in America is very sticky at the moment. And due to this, chances are that the Federal Reserve may likely keep interest rate higher for an extended period of time, which will further bolster the value of the US Treasury bond yield, which is directly proportional in value to the US dollar. Now, that for me supports a bearish idea. But while looking at the technical structure on the chart, which obviously gives us an insight into the behavioral patterns of market participants, we have no other choice than to follow what the technical structure is saying. So if it goes to the upside, that means this is how market participants want to react and prepare for the upcoming events for this week. So if price continues to the upside, please, as soon as price move reasonably well, move your stop losses, secure your position. Remember what I said earlier, we may likely see an extended sideways trading activity ahead of this upcoming event. So price may likely come back to snap back into our entry point at every point in time. So let's take all this into consideration as well. Now, the only condition that will make me join a bearish move here, I already have a sell stop order below the structures here. If the price continues to the downside, we are joining right away. However, if the market gives us the privilege to join early, that is, price breaks down the ascending trend line first and does a retest a couple of times, showing us that buyers are finding it difficult to continue the momentum above the ascending trend line, then we can join earlier, and then by the time price breaks down the 1.27260, 1.27250 area, we will be having two sell positions at that point in time. So let's see how the market is going to play out here, and please always have enough room for price action to move around. So I simply mean that you should have a wider stop loss. So if you are buying above the 1.2739, stop loss should capture below the 1.27260 area, which will be dovetailing to about 10 to 15 pips stop loss depending on where you entered your trade. And if we are selling to as well, we will be having the same range for our stop losses on this one. So it's a simple setup we have here on the GBPUSD. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section.